before the start of the year, there were just under 75,000 unemployed Singaporeans and permanent residents. By September, that number had risen to more than 110,000. Layoffs have also gone up considerably, close to tripling from just about 3,000 in the first quarter of this year to more than 9,000 in the third quarter. And this brings the total number of retrenchments so far to 20,000, which is almost twice what we saw in the whole of last year. But there are signs that the worst could be over soon. For instance, the unemployment rate rose significantly less in September than in previous months. Despite those signs, analysts have warned that the situation could remain bleak for quite some time.
Even if we reach the bottom, that we don't see further deteriorations in the labour market, this weak, employment prospect will, spill over into 2021. Employers will remain cautious in their hiring. They will only start to increase their headcount when they see more pronounced improvement in their business earnings. This is especially for those sectors that are worst affected by the pandemic. For example, the hospitality sectors and the aviation sectors. These are the clusters that will continue to struggle in the near term.
Economists have warned that the recovery is likely to be an uneven one. Industries like tech and electronics haven't really been affected by COVID-19. In fact, they have continued to grow despite the pandemic, largely due to demand for work-from-home tools and services. On the flip side, many jobs that are reliant on tourism have been lost. Think your tour agents, bartenders, waiters, aircraft maintenance workers, shopkeepers, and people in these sectors that handle the operations and paperwork on the back end. So even if the economy recovers, they might not be able to get their old jobs back until we can all travel again. Even if economic indicators like the GDP show healthy signs of rebound, the situation for this group of workers isn't quite so bright.
At the aggregate level, output goes back to so-called pre-COVID, and that's because sectors that are doing well continues to do well. And these sectors don't necessarily hire as many workers, right? But even at a firm level, let's look at a firm level, right? If you are a restaurant, right? So at best, restaurants are, back at 60% of what they used to do, 70% of what they used to do. So you still have the 30%. You perhaps kept the workers because of the job support that the government gave, and that's going to wind down. So you will redo your math and say, okay, maybe do I still need the 30% excess that I've kept?
If the labour market recovers in such a disparate manner, it could lead to greater income inequality. Between 2014 and 2019, the wages of lower-income residents in Singapore grew at a faster rate than the average Singaporean. But this could be stalled or reversed since this group of workers tends to be in industries that are more severely impacted by COVID-19. But observers say that Singapore has taken heed of this issue. A big chunk of our $100 billion COVID-19 stimulus package has gone to the Job Support Scheme, which is a wage subsidy program. And then there's been this big push to get people who have lost their jobs back into school again and to pick up a new skill that's now in demand. But then, as we all know, training takes time.
I think during normal times, there could be a slow transition from the lower value added economy towards a more higher value added one, and definitely there's a lot of time for workers to slowly train and adapt to these changing conditions. But at this current moment, where the pace of change, like what I mentioned, was at least 5 to 10 times more. So one challenge workers face is the rapid retraining in order to adapt with these fast changing times.
As the pandemic rages on across the world, analysts have warned that the economy is not likely to return to pre-COVID levels until a vaccine arrives. And so till then, job seekers will just have to hunker down and weather the storm.